Okay, thank you, team. Welcome back, Angie. How are you?
Thanks. I'm good. How are you?
I'm great. It's very nice to have you. I want to talk about what you see going on, and let me just see if I could get my charts up here. There. Okay. Can everyone see cash wheat up here?
Oh, look at wheat. Isn't it
Okay.
beautiful?
All right. So, Angie, I want to talk about what's happening in the grains, talk about China, and also talk about I received an email from you, and you have started something new. And
Yeah.
you know what I really liked about the email is you said in the email what you were doing prior, wasn't exactly a great fit for you, and you did your best, but it wasn't really your wheelhouse,
Yeah.
and that you're doing something different now. So, can you tell our audience about what you were doing and why you made this adjustment to, I believe the name is Consus of your,
Yep.
there you
Yeah.
go. We're going to make a nice commercial for you.
Oh,
So,
I appreciate it.
all right.
The
So
check's in the
Maxim,
mail, Dale.
so what's the difference between what you were doing and what you're doing now?
Yeah. So my career has always been heavily involved in working with farmers and helping farmers kind of establish what they can do to better market what they have, what they're producing. So, a farmer, it's always been kind of one of those things where the farmer always buys retail, sells wholesale, all of these
Oh,
things. And
yeah.
so, we've kind of had that overall struggle, right? And when I first started about 16, almost 17 years ago now, the farmer really didn't spend a ton of time learning how the commercial side of the business traded, how the elevators, those big elevators across the country with steel bins and concrete bins and everything, what they did to really kind of make money. And there'd always been a bit of a mystery that had surrounded that part of the industry. And so when I started, one of the things that I really wanted to do was educate the grower and do all that I could to really help the grower trade like an elevator, work to do all that they could do to really understand how to maximize the storage. And so what we've seen over the last 15 years, 20 years probably, is that on-farm storage has increased exponentially. The farmers kind of recognized what was taking place in an overall standpoint, that he or she was stuck to a certain extent without any power. They just would deliver grain at harvest time and have to take whatever that price was. And so for us, one of the things that I've really pushed, or for me, one of the things that I'd really pushed was helping to teach the farmer how to do that, how to do those things. What is it that the elevator does? And so midway through about 2011, that was what I actually had done, was transitioned into managing a commercial facility. I had 5
Okay.
elevator locations that I was in charge of, but I also really still had this passion for working with the farmer. And so I was really stuck in this sort of ethical quandary as time went on, that, I was teaching the farmer all of the ways to a certain extent to make money, or that the elevator was making money, and my salary was being paid by the elevator. And I just got to where I felt
Interesting.
uncomfortable. Yeah, like
All
I
right.
wasn't the person that I was working for was the farmer, which you can't fault, but the person that was paying me was the elevator, and I just wasn't performing to the level that I should be, or if I
Yeah,
was able to
I
make
think you
extra money.
actually used the adjective that you sucked at it
I did. I
in that
did. I felt like
email.
I
I go, I
did.
mean,
Like I just
there,
wasn't
there,
making
there's someone looking in the mirror
right,
and
exactly. And
reassessing. Okay,
yeah, and so I wasn't making the money that I needed to for the elevator, and I felt it was just best that I step back and communicate with my growers the different way that we could approach this process. And so we established this. And about a year ago, I had reached out to a friend of mine that was doing the same thing, on his own independently in the Southeast market. And I said, let's start a business. And he's like, doing what? And I'm like, stuff, we'll figure it out. And we met a gentleman that's huge into regenerative ag, also very independent, also looking to help the farmer. And so we've teamed up, and we're just kind of seeing where we head. But so far, it's been very well received, and I look forward to continuing to educate, not only the farmer, but maybe some folks on the outside looking in that want to learn more about how ag in the world, is traded.
Okay, Angie, I really wish you all the success in the world, and it's not always easy to reinvent yourself in the financial arena, the agriculture, whatever arena. So
Yeah.
I'm hoping this is a great fit for you and your business expands like a mushroom.
I
How's
appreciate
that?
that. So far, so good. So let's talk about
Okay.
what's going on in global
Yeah,
grain trade here.
let's talk about China, which is one of the biggest buyers on the market the last several years. Is it true that China has stockpiled over 50% of the above ground grain that's available? Do they have that large of a stockpile from what they've been doing over the years?
Yeah, I mean, according to the USDA, they have for quite some time. Last year was the
Okay,
first year that we actually saw a significant reduction in what we perceived as available supplies.
okay,
And as a result, we saw China really ramp up,
yeah.
everything they could get ramp up
And
buying of everything that they could get their hands on. First, it
has
started
that
with
has that
soybeans.
changed with as things have changed more towards free markets to G markets. Hey, that rhymes. Free markets
Right,
to
to
G
G markets.
markets.
Oh man.
Has that changed with them deleveraging and they wanted to tamp down on commodity prices, which means
Yes.
they want to buy them cheaper?
Yes.
Um,
Yeah.
has anything changed in China with the problems they're having internally now?
Yes, we've definitely seen what I would call a substantial slowdown in purchases made by China, both for corn. The last corn import purchase that they had made, flash sale wise, I haven't had a chance to dig through this morning's numbers just to make sure they didn't show up as a corn buyer. But the last purchase that they made that was really noteworthy was in May. We did get
Oh, yeah.
a release from the USDA attaché there in China yesterday stating that corn imports will probably drop 10 million metric ton from this year or this past year into next year, which is a pretty substantial drop. And we have seen some struggles with soybean crushers there being limited on their ability to crush beans due to the reductions in, the electrical or in the electricity that's available to them. So we have
Oh, yeah.
seen
Yeah.
some pretty substantial slowdowns there. In soybeans, it's especially most obvious. Now, we had Hurricane Ida that we had to deal with. It managed to go right up the gut and hit every New Orleans export facility we had basically. And for a minute
Well,
there,
just
we
what
were
we
shut
need.
down. And
Weather contributing to supply chain issues.
yes, and you're seeing it with some of the values in fertilizer here for fall stockpiling in the U.S. and some of these other things is just that continuation of weather. And so with Ida hitting, we saw a big impact in our ability to ship, but we're still not seeing the sales pace indicate that we really are struggling with anything. The sales pace is lukewarm at best compared to a year ago, and currently one could estimate that soybeans have managed to go from incredibly tight, inability to really kind of meet the demand. There was a concern there that we would see us slip well below what would be considered pipeline minimal levels of soybeans, and now suddenly we've flipped that. We managed to ration some demand. We saw the Brazilian crop come in larger than anticipated. We're looking at next
Okay.
year's crop possibly coming in larger than anticipated. And you can see there where we got a
Was
USDA
this
surprise.
okay? So
Yeah.
this was USDA report. Okay.
Yep. Yeah. Yeah.
And it was most negative for beans,
Yeah. We
obviously,
saw a
right?
significant increase in available supply in soybeans that we weren't anticipating to
All right.
see.
So this was the same one for corn,
Similar.
but corn
Yep.
has held the report low while beans have
Mhm.
taken it out. Was wheat included in that report? Because I don't see any,
No,
unless this was the day.
yep, wheat actually got a
Yeah, it
bullish
rallied.
USDA number. Yeah, yep. So wheat's what's held corn held corn's head above water. Obviously, too, in corn, there's some concern with the cost of fertilizer, as I said, the lack of available supply, and some concerns over what that looks like with China, basically doing all they can to keep their fertilizer that they produce, which they provide the world 30% of its phosphate, and they're going to try to keep that domestic or limit who they export into. And so we are seeing this kind of continuation of these supply chains or available supplies being caught up in these pinches, and it is impacting grains. Wheat has a different
Wheat
story than
is
corn
a
and
strong
beans.
sister. It's
Yes.
really the
Yeah.
leader.
Yeah.
And why is that? Because of our crop or the winter crop or globally? Could it be maybe Australia not having a great crop?
Yeah.
Huh?
Australia, it looks like they'll produce a decent crop. Most of what's going on in wheat is we did see the Canadian prairies struggle with drought. We've
Okay.
seen their crop basically cut in half in the northern plains. Like the spring wheat crop basically couldn't catch a break anywhere, whether that was in the Black Sea or the Canadian prairies or the northwestern portion of the Corn Belt. And so we did see a significant reduction in available supply due to weather and production issues. And we're currently still trying to wrap our arms around what Russia's going to do. Russia last year introduced an export tax, and they've been using that to kind of throttle back how much wheat they pour into the global supply. And right now there's a big question as to how much they will export in the year ahead, and that number could range up to 250 million bushels worth of difference, which is pretty big. And so wheat's going to kind of continue to trade relatively strong, just simply because we're not going to alleviate any of these global sort of pipeline pinches anytime in the next six months at minimum. Now, Russia.
Well, why doesn't the Fed just print some grains?
They
can't do
if
that, can they?
only it worked that easy, right?
Yeah. So, Angie, are we coming up to some type of normal seasonal low in October? Is there a traditional harvest low, and for which crops in October?
Yeah, typically you will see soybeans, especially put in a low early on in the month. And some folks would argue right now that you look at that 1235 range there. I think we dipped down to 1231, traded back up above it, tried to get back up into that 1255 range, give or take, and it failed. Soybeans from a seasonal perspective should see some level of support come in, just simply because we do tend to see that harvest low early. We are running a bit behind, I would say, in the South when it comes to harvest. And so we may continue to see some level of what we call harvest pressure, which is the farmer selling and the elevator hedging, so they're shorting the board in order to protect their physical inventory and their futures risk there. So we may see some continued pressure, but at this point, from a seasonal standpoint, we do tend to see the lows get established in the early part of October, and then a little bit more in the way of some trading once we get comfortable with what the crop looks like. Right now, we have a bit of a wild card looking into next week because we have an updated supply and demand number. And so we'll start to see some more objective yield data come in, actual field reports and things of that nature, to give us a better indication of what we're going to see from a production standpoint. And that could really set us up more so than anything else, from a directional standpoint. Obviously, when I say more so than anything else, that's hinging on the fact that we don't see a continuation of energies going into outer space. Any sort of spillover exuberance there, tends to really play into soybean oil, which helps soybeans, and plays into ethanol, of course, and gasoline, which helps corn, and then wheat's in its own world anyway. So wheat's going to just kind of maintain lofty expectations until we see something change, substantially from a global standpoint.
Ethanol use increasing, decreasing, with EVs on the horizon, not going to be necessary as the market's starting to look at that ethanol could go to the, garbage can of
the wayside there.
Energy, energy source.
There's been that conversation. And we've seen some conversations too, some uncertainty over what the Biden administration is going to do with their their EPA has a level of influence on blending requirements and whether or not we're going to alleviate some of, we had a couple different refiners take a gamble, in 2020 and into 2021 that the administration would kind of alleviate some of their requirements to meet blending standards with the RFS. Rumor has it that they will allow that, and that could have set some precedent for what we see going forward. But right now, EVs on the horizon, definitely you aren't going to see much in the way of increase in ethanol production. We haven't had a new ethanol plant come online, and I don't know how long, but we are seeing biodiesel or renewable diesel keep folks attentive as to what's taking place from a soy oil standpoint, more than anything. But yeah,
There's a strong dollar. Dollar's been pretty resilient all year. Has that played a role in depressing prices at all?
No, we seem to, maybe it's played a role in keeping the exuberance away from a rally standpoint. But I don't think it's done much. It hasn't hurt exports at this point in time from what we've been seeing. We really don't want to export wheat anyway, and the dollar tends to have a bigger influence on the wheat market than anything. And that only tends to happen if we have plentiful supply, which we don't have. And so I think right now, most folks are really just kind of ignoring what the dollar is doing as a whole. Though, like I said, if we get to where we feel like we're comfortable from a supply standpoint, then it can become a bearish indicator, like, prices were weaker today because the dollar was stronger. But so far, no one's really spent too much time talking about the influence of the dollar since it turned around here a couple months back.
Well, we've had pretty nice sell-offs, and just technically, it looks like just corrective action on the decline in corn and beans, except the beans. I'm sure there's some people talking about a potential head and shoulders top that we broke right here in beans that could take them down to 10.
Yeah,
just a measured move. Do you think $10 beans is a possibility? Is a chart forecasting?
I'd say from both a fundamental and a chart standpoint, that would be something, that we have tremendous concern about, and something that we're looking at as to how to manage that risk, because I do think that's a pretty substantial exposure for a lot of my customers as we look ahead.
30%.
Yeah, it's a huge hit on return on investment, obviously. And so there's a lot of conversation due to the reduction in available fertilizer that we'll see an increase in soybean plantings too. And so one of my biggest arguments with my customers is, if you're going to increase soybean acres, make sure you're hedging these types of prices as well, because, based on what you're saying here and what we're seeing on the chart side of things, combined with what we could see from a fundamental standpoint going forward, we definitely could see soybeans go from the darling of the market here not too long ago to, the guy out front that no one wants to make eye contact with.
I know we have a question from one of our attendees. I know it's, geographically, there's, I don't believe any cotton grown in the Midwest, but we've had a very dramatic bull market in cotton. Do you have any comment on it?
Yeah, I mean, cotton kind of went higher and then fell off. It didn't really do the whole let's put in new highs since 2008 thing that we saw some of these other groups do. Cotton, to a lot of what we've seen, or a lot of the struggles that we've had, has been with what China is going to do, and what we may see from a demand standpoint, or even in export standpoint there. We did see some production reduction in available supply here as well, thanks to the higher prices elsewhere. Cotton didn't respond to the market. The cotton didn't provide market indicators to the farmer to get it planted. So we have seen some reduction in overall supply there as well. And really, a lot of folks will tell you that it's almost just become the natural gas of the commodity, the sector, right? I mean, just look at it. And so some will say that that's not necessarily even managing risk. There's some complaints farmers have that because that market's so heavily inverted, that the cash traders that they're working with are forcing them to price off from the next month in line versus the front one, just simply because of the volatility that's taking place. And so, to a certain extent, cotton is somewhat of a thinly traded market. It does have a bit in the way of a more bullish story, thanks to the reduction in supply and potential changes in some of this demand going forward.
Looks like
And the fact that
polyester will make a big comeback this winter.
right. I'm looking
Oh, you
forward
think
to seeing you in a
men
leisure
will be
suit.
buying
So.
leisure suits.
Yeah, exactly.
Oh,
Like I'm
see,
going
you
long
remember
leisure
it. You
suits.
made that yuck
That's
sound. All
right.
right.
Yeah, I'm going long leisure suits right now. So yeah, I mean, I think eventually what you'll see is everyone will kind of recognize that cotton's turned into the Wile E. Coyote market. You know how Wile E.
Yeah.
Coyote'd run off
Yeah,
a
on the
cliff, and
cliff.
until he looked
Sure.
down, he wouldn't fall. And I
Right.
think that's where we're at. I think eventually you'll see a pretty substantial correction there.
Yeah.
But when that happens is the $1 billion question.
Also getting a question from Anthony that jet fuel is going to be palm oil is going to be used for jet fuel. Have you
Yeah,
heard about
what
that?
you're looking at there is that's that renewable diesel that we were talking about,
Oh,
soybean
okay.
oil and some of that.
Okay.
And so that's the concern that we have there is that you could see a pretty substantial increase in overall demand, in that regard. Now, I struggle with that. It's been introduced by certain states. It's more of a state-run thing than anything. I really do think we struggle to see, if we do see this continuation of high food costs, I struggle to see us putting it into jet fuel. Although we are seeing a pretty substantial increase in crushers, we are seeing crush plants come online. And if we do see a long-term reduction in export demand from China due to an increase in Brazilian production, we'll definitely want to be able to offset some of that loss in exportable supplies with, an increase in crush. So there's going to be some room there, but it's definitely going to be one of those struggles because soybean oil truly is a food. We always used to argue about that with corn and ethanol, and corn really isn't something that you can convert. I mean, you can, but it's corn syrup or it's corn, sugar or something of that nature. And so, that's part of the reason we've seen palm oil trade to all-time record highs, right? And soybean oil has helped support soybeans. And so
I've always
it's
been
all
against
going to be
converting
something.
food to an energy source. Because
And so
seems
I think
like
we end up struggling with that a little bit, as time goes on. I think it works to where there is a point that we price ourselves out of that market. But for now, with the feeling that we need to increase energy supplies and whatever it'll take to make it a clean, renewable fuel source, I think you see some continuation of strength in all vegetable oils for that reason.
So even though we've had pullbacks in corn and beans and not so much wheat, do you think that it still has the makings of an ongoing bull market, that once this beans find whatever level they need, or corn, or would you be buying pullbacks and looking for buy points if we're going to have an ongoing commodity agricultural bull market as expressed by DBA? I know I've been showing individual grains because you're on, but all we've done is consolidate since
the start.
move sideways.
I think any sustained move to the high side is going to be entirely dependent on what takes place in Brazil or South America as a whole. We see another reduction in expected production out of there, due to a change in production conditions or weather or something of that nature, when it comes to corn, which really isn't going to be something that we're going to focus on until January into February. If we see a production problem arise there, then all bets are off to the high side. If we see things come in as we're anticipating, I mean, we're looking at replenishing the world supply, with upwards of 1.5 billion bushels difference next year versus this past year, which is huge. I think until we get confirmation of that, though, we remain in this consolidation pattern. I think corn and soybeans and wheat, I think wheat continues to maintain support, at that $7 range on the Chicago side of things. I think corn in the meantime maintains support around that $5 range. Soybeans will probably be able to keep some level of support just simply because they're tied so closely to everything else. And so we can't let ratios get out of whack, or you have a lot of carryover problems into next year's production. But I think soybeans probably, have to test that $12 range before I would feel comfortable saying there's a reason we could go long.
And the supply demand report is when, Angie?
Tuesday at noon Eastern.
Okay, and what are your expectations? Do you have any?
I think the USDA is going to come in relatively close to what we know that we're going to see carryout increase relatively solidly in soybeans. I think we'll see it come in, into that 300 to 350 million bushel range, which is more than double, or close to double, not quite double, excuse me, of where we were a while back. So those will be pretty substantial. I think corn's probably going to come in around 1.4 billion bushel, which is in line. I think everything's going to come in relatively close in line with expectations. And I think it's all stuff that we really know. Overall, we may have some surprises potentially with production, but at this point, based on what I've been seeing, I don't think we necessarily will. So I think the report will probably come in as expected. And then we'll really just try to pay attention to what on earth is happening out elsewhere in the market structure.
Okay, well, I am signing up right now with
Wow.
I'm creating I'm just going to do that anyway.
We'll
Oh,
get
this is
you.
for creating the account. Okay,
Yep, we'll
so,
get you set up.
all right,
So
well,
I'll get you the VIP rate, Dale.
all right, thank you very much, Angie, and thanks for coming in here and sharing your views on the grain markets. You can't eat gold, right?
Yes,
Even though they call
exactly.
beans protein gold. And, people are fighting over natural resources right now to keep their houses warm in Europe. Russia going to play any role? I mean, I know they have leverage on natural gas. You talked about what they may do with wheat, but
Hmm.
um, I want to wish you good fortune on your new effort here with Consus, and uh, hope that you help farmers who have probably one of the toughest jobs. You have to love it to do it because
Hmm.
everything's uncertainty. It's uncertainty when the planting, the growing, the harvest, and the prices you're going to get, and just all of those things are have to come together. And then you have a big crop, so does everyone else, and you don't get as much. And when prices are up, you don't have
Yeah.
you have a short crop, and when you could get good prices. So I really admire people that are risk takers, and people don't understand how much risk farmers take every season. And
Yeah,
uh,
it's for
I,
sure.
I, res-
It's
I respect
definitely
I
a
respect
great
what they
industry to be
do,
a part of.
and I wish you all good fortune, good hunting, and prosperity for everyone that you work with, Angie. Thank you very
Thank
much for
you.
being here, my
Yeah,
trading warrior sister.
thank you
And
for having me. I always enjoy coming on.
Angie Setzer, you could follow her at the Goddess of Grain. You could bring your sacrifices to her. Bring a bushel of corn, wheat, and beans before you meet the goddess. And thank you very much again, Angie. It was great chatting with you again.
Thank you.
Okay, so that's a wrap, everybody, and hope you enjoyed it. I think you need to keep grains as part of, if you're a believer in that inflation is coming, you're getting nice pullbacks in beans and corn, and use your technical work to find entries, because um, they can move a lot higher during this cycle. And you could join the team in 15 minutes for the morning edge. And remember, don't just count your beans and wheat and corn, count your blessings. And we'll see everyone pre NFP tomorrow, and get ready to trade and react to the reaction. So that's a wrap, everyone. Good hunting the rest of the day. Adios. And thanks again, Angie.